Hey guys, welcome back to my channel. In today's video, I'm going to go through my favorite technical indicators with you guys. These are the ones that have kind of stuck with me over the past several years. I know that there are a bunch of indicators out there, a bunch that you can utilize. I have tried most of them. These are the ones that have stuck with me, that I utilize on a day-to-day basis, and that have really been able to implement them into my strategy. Now, I do want to just say one thing. You should limit the usage of indicators when you're trading. What you really want to gauge is the price action of the stock. And if you're looking at too many different indicators and they're telling you too many different things, especially when you're scalping because it's so fast paced, by the time you read your 20 indicators, you're more than likely going to miss that move because you took too much time to read all of those indicators. So focus on a couple that you really like to implement into your strategy, and make sure that there are useful indicators, not just ones that you're willy-nilly utilizing for no reason because someone told you it was important. Make sure that within your strategy, those indicators are a key component of what you're trying to do, whatever strategy that you're trying to implement when you're trading. That being said, don't forget to like and subscribe to my channel. Also, don't forget to turn on those post notifications so you guys never miss any content. And yeah, let's just go ahead and get started. All right, guys, so let's go ahead and get started. I made a little PowerPoint for you guys to kind of go through what each indicator is, so you guys have a visual as I'm talking about it. So first we have moving averages. So your moving averages pretty much define the current trend of the stock. It helps smooth out the price action, so you're able to gauge a little bit better and identify the trend, whether it's on an uptrend, if it's trending above the moving average, or if it's on a downtrend trending below the moving average. It's not going to signify price direction. It's kind of going to give you an understanding of what the stock is doing currently. It's not going to obviously technical indicators aren't going to show you what the stock is going to do, but what it's currently doing and how that can help you predict future price movement. That being said, I utilize moving averages as support and resistance levels. So I'll show you an example of that as well, but that's really what I want you to gauge from this. So it's going to show you the trend of the stock, and you can utilize them as support and resistance levels. The moving average that I use, so there's two different kinds. You have your simple moving averages, and then you have your exponential moving averages. I personally use the exponential moving averages because I think that they hug the price action a lot closer than simple moving averages. So the exponential moving averages apply more weight to recent price action. So that's why it reduces the lag. One thing that you guys should know is all indicators have a lag because they use historical data in order to show you and identify the indicator. That is why there's always going to be a lag behind that indicator. So as exponential moving averages reduce the lag by applying more weight to recent price action, which then in turn it's more sensitive to recent price movement. It's going to hug that price action a lot closer than a simple moving average. One is neither better than the other. I personally think the exponential moving averages turn before simple moving averages. I've used them both. I've used them side by side, and I've just seen the exponential moving averages move a little bit quicker than simple moving averages. So that's why I use the exponential moving averages. And I use the 9-day and 21-day exponential moving averages, and I'll show you how to apply those as well. Next, we have your VWAP. So this is short for a volume weighted average price. So this is an intraday indicator, so you can use it on the 1 minute, 5 minute, and 15 minute. Personally, I recommend just using it on the 1 minute and 5 minute. I don't really utilize it that often on the 15 minute, to be honest, unless I'm utilizing it in conjunction with my EMAs, which I tend to do sometimes. This is also utilized as support and resistance levels. So VWAP, I'll show you how to add it, but I use only the middle band on the VWAP. I don't use the upper and lower band. So there's 3 bands, and I'll go through in a second. But I only use the middle band on the VWAP, and I use it as support and resistance levels because that identifies the kind of market equilibrium of the stock, and whenever the stock tends to travel too far to the upper band or lower band, you can see that it gets sometimes rejected. When it overextends itself, comes back to that middle band, which is its market equilibrium. The more liquidity in the market, more liquid the stock is, the more movement in price action, and VWAP is going to move around more. Like I said, it shows the stock's equilibrium. Usually stocks always come back to that middle band if they move too far away or if they're overextended. And then we have the volume average indicator. So this one I have been using for a long time. So what it measures volume of the stock, so it'll show you the volume of the stock, and then it also has a moving average on it, so a 50-day moving average. So what it shows you is the volume of the stock on that specific time frame, on that specific candle, but it also plots a simple moving average that is based off of the volume. So the moving average is obviously the average volume over that 50 days, and it's going to plot that within whatever the volume for that stock is as well. So I like to use this more than just the volume bars that are default with Thinkorswim, because this actually shows you obviously that moving average line, which is going to show you obviously the average volume of the stock over the past 50 days. You can adjust whatever days you want to, but I always keep it at 50 days. And you can kind of compare and contrast whether the stock has high volume or low volume, whether it's above that moving average line or below that moving average line. So I've talked a lot about these now, so let's go ahead and show you exactly how to utilize them and how to apply them to your strategies. All right, guys, so here we have NIO. I haven't really charted NIO like that, so I wanted to pick a stock where I don't really have that many lines. You guys can just see pure price action as I add these indicators. So first indicator that I'm going to add is going to be my volume average indicator. So we're going to go to studies, edit studies, and we're going to type in volume average and add this indicator and apply it. So there we go. It automatically applies the volume average with a 50-day moving average over it. So if you look at this, we can see exactly when the stock has high volume, low volume. So if we look at NIO here on this day, we can see in the morning as the stock drops down, there's a lot of volume behind the drop down, which is a good thing. So you always want to make sure that there's volume behind it. The volume average will signify whether there's high volume or low volume. Then, as you can see, as the stock starts to consolidate, volume starts to drop below that moving average line. These are the times where you don't want to trade, especially when there's no volume behind the stock, especially if you're breakout trading, scalping, supply and demand zone trading. If there's no volume behind the stock, you're not going to get a significant move on the upside or downside. Stock is in just a consolidation period, and this confirms it here. And then I'm going to actually add each indicator and then kind of show you how I use them all in conjunction. So we're going to go back to editing studies, and we're going to type in exponential moving average. And I'm going to put two on. So I always put the 9-day exponential moving average and the 21-day exponential moving average. So I have both of them are defaulted to 9-day. So I'm going to go into the edit. I'm going to edit this one here, and I'm going to change this to 21-day. And sometimes it acts a little weird as I'm trying to change it. 21-day, and I always make the 21-day yellow. That's just what I'm used to seeing, and I'm going to change that 9-day to orange. And I'm going to apply those, right? And then what we're going to add to is the VWAP. So the VWAP here. All right, so once you have your exponential moving averages, this is what I look for when I look at exponential moving averages. So when I'm looking at my moving average, what I want to see is how it signifies the trend in the stock, okay? So, all right, guys, so when we're using moving averages, I'm going to show you exactly how I utilize them. So let's zoom in here to NIO. I don't have any support and resistance levels charted here on NIO because I just want to show you pure price action utilizing those EMAs. As we can see here, I'm going to show you, so what I look for is a couple things. So the first thing that I look for is if you see your higher day move or your lower day moving average. So my lower day moving average is my 9-day moving average, and my higher one is a 21. So the 9 days is orange, 21 is yellow. If you see that higher day, that lower day moving average, so your 9-day moving average crosses below your 21-day moving average, this signifies a death cross. What this means is that the stock could potentially reverse into a downtrend. So you can see right here that the 9-day EMA crosses below the 21-day EMA. And then what you want to pay attention to is what is volume telling you. On this candle here, volume is spiking, which means that this drop here is going to be a strong drop to the downside because there's a volume behind it. If there wasn't volume behind the drop, I wouldn't necessarily consider it a strong trend on the downside. Just because it's trending, it's not trending with high volume. You always want high volume behind the stock on the downside or upside. Signifies that it's a strong trend, strong breakout. There's really no volume behind it. It's not going to signify a strong trend. So as you see that your EMAs are crossing, stock pulls down here, volume is high, The next thing you want to look at is for a pullback. So say we miss this move, we're not able to catch this scalp here. What I'm looking for is for the stock to pull back and for me to be able to get in on the pullback. Now what we see happen here is as the stock comes down, it pulls back here. When it pulls back, one, pay attention to what happens to volume. Volume drops, okay? When volume drops like this, it signifies that it's a pullback and not a reversal. There's not a lot of volume behind that pullback, so it means that the stock is just pulling back. It's a healthy pullback, not signifying a reversal in the stock. Stock drops, volume starts to pick back up. So when you see volume create kind of a U shape like this is a strong momentum right here. Stock was trending down, pulled back, healthy, and now the volume is increasing again. We could see the stock continue its the trend that it was on. And what do we see here? The same thing happened with the price action. Stock comes down, pulls back up here, touches this 9-day EMA, holds the EMA as a level of resistance. As it's holding that EMA as a level of resistance, stock drops back down. This candle right here is your entry point candle as the stock breaks below. You can see that this candle also holds fully below that 9-day EMA after it pulls back. Volume is high on that candle, spikes. That is your entry point, and this is how you can potentially use your moving averages in conjunction with volume, as well as your support and resistance levels that you may have charted on the stock. So another thing that you want to see if you're looking at this, so say for example you're looking for the upside on a break. So what you want to see on the upside is you want to see that so what you want to see on the upside break is you want to see your 9-day EMA cross above your 21-day EMA. That is going to show you that the stock is potentially reversing into an uptrend. So I'm going to show you an example right here. Same stock, NIO. So we see right here, okay? So we see here a death cross. 9-day crosses below the 21-day. Stock's not able to hold. Obviously, like I said, I don't have any support and resistance levels charted. I just want to show you pure technical indicator analysis. Stock drops here. Volume's kind of iffy here on the drop. It's still high. Even on this green candle here, volume is high. So it doesn't signify a strong trend here. Stock's not able to hold below that 21-day and 9-day EMA, trends back up. As it starts to pull back up here, what we start to see, stock pulls down, comes back up. We see that golden cross, which is your 9-day EMA above your 21-day EMA, golden cross, stock pulls up. You could potentially enter on the break right here. Volume is high on it as well. Or you could wait for the stock to pull back here. Where does it pull back to? Your 9-day EMA. You get in on the bounce of this candle and ride the scalp up. When you're taking plays like this, if you're taking a bounce off of an EMA play, you want to make sure that you trade it based off of the time frame that you're looking at. So if I'm looking at the 5-minute time frame, I'm not going to switch to the 1-minute time frame to try and trade off of the 1-minute time frame and vice versa. This was when the stock was on a downtrend. You can see the same price action holding below that 9-day EMA, pulls back, not able to hold fully above the 9-day, and then comes back down. Obviously, if you're watching it on a 5-minute time frame, it's a lot more clean compared to your 1-minute. Your 1-minute, you're going to get a lot of shakeouts with these green candles here. Not a lot of clear price direction here versus your 5-minute time frame gives you a lot more clear price direction. Easier to gauge. You can see here, same thing, a lot easier to gauge than your 1-minute time frame and a lot easier to read than your 1-minute time frame. So like I said, I use EMAs as support and resistance levels. I use them to signify whether the stock is going to reverse into an uptrend or a downtrend, depending on if I see that golden cross or if I see a death cross, 9-day above 21-day golden cross. And then obviously as the stock continues to trend above that 21-day EMA, signifies an uptrend. If the stock is trending below the 21-day EMA, signifies a downtrend. If you do see that volume is low and the stock is just kind of holding in between the two EMAs, it could signify consolidation within this stock. All right, so the next indicator that I'm going to show you guys is going to be, the VWAP. So I'm going to actually add the VWAP here. And so when you add the VWAP first, this is what you will see. So you add the VWAP and it shows you the upper band, it's your upper band, your lower band, and your middle band. So what I'll do with the VWAP is I actually remove the upper and lower band. So if we go back into my settings, edit this. So the VWAP is your middle band, and then the upper band, I'll just uncheck all of these so it doesn't show it. So you just uncheck it, okay, apply, unchecks, and it removes your upper and lower band. So now I just have the middle band, and that is what I look for when I'm looking at the VWAP. I pay attention to the middle band. And usually what I look for when I'm looking at the VWAP middle band and how I utilize it is I utilize it as support and resistance like I stated. So what I will look for is for the stock to trend above that VWAP. It's just another indication that the stock is trending upwards if it's holding above the VWAP. And if it's trending below the VWAP, it's just signifying that the trend is holding that downtrend. If it's trending on top of the VWAP, kind of in between, just signifying that there's no specific trend in place on the stock, not really a good stock to trade at that point. It's in a consolidation period. Another thing that I look for when I'm looking for a VWAP, let me see if I can catch something here. Okay, so what I look for is two things. So if you see a cross in between, so if you see your EMAs crossing above your VWAP, it signifies an uptrend. So you can see here on this stock had a kind of, so if we look here, you can see right here, that the VWAP crosses below your EMAs, okay? This signifies that the stock is gonna start an uptrend, or it's already on an uptrend. So if a stock trends above the VWAP, uptrend, below, downtrend. You can see right here that we get a full cross of your EMAs and VWAP. Volume's high on that push up here, and you can take a scalp on this push right here. So what you could use, you see that the EMAs cross. This candle is your first confirmation candle. This is your entry candle. You would scalp it to obviously your next level of resistance, whatever that may have been for this stock, or until you see a pullback or a reversal in the trend. Personally, I just scalp it to the next level of resistance. So if I see a cross like this, I'll enter when the stock fully holds above the 9-day EMA on high volume, and you scalp it quick, 3-4 minute scalp, depending on what time frame you're looking at. I'm looking at the 5 minutes, so this would potentially be a 10-15 minute scalp right here. Okay, and then on the opposite hand, you can see the same thing happen again. So over here we see that the EMAs, the VWAP crosses above the EMAs, so the EMAs are trending down, stock is trending below the VWAP, considered a downtrend. What happens here is you kind of want to be careful. The stock does come down here, but what you don't see is volume is still pretty low. It's not significantly high enough for the stock to make a huge move to the downside. However, you can see later in the day here, stock comes back down, retests kind of that level, holds below the 9-day EMA. What happens? Volume picks up slightly on that breakdown, and the stock trends below the 9-day EMA on a downtrend. Another thing you can also see here is that when the stock does break here and you see the crosses of your VWAP and EMA, what happens is the stock breaks, pulls back. Where does it pull back to? Right to that EMA. That EMA is a level, it pulls back to the VWAP. The VWAP is that level of resistance for your stock. If the stock breaks above the VWAP, we can see an uptrend on it. If it breaks below or bounces off of that VWAP, look at what happens. The stock bounces off the VWAP. Perfect move down. How you would play this move, if you see the bounce off of the VWAP here, stock uses that VWAP as resistance. If it holds fully below the 9-day EMA, your entry point right there, or you wait for more significant volume and a break of the previous level, your entry point would be this bearish candle right here. So now I'm going to go through a couple examples with a stock that I have levels charted on. So let's go through Tesla today. So you can see Tesla here. So this is Tesla today, and I'm going to zoom in over here. So you can see, let me just remove this. So we can see here on the open, Tesla moved up, okay? So one of the trades that you can take here on the open is, okay, we see Tesla make a move up. What you want to wait for is for the stock to pull back. When it pulls back, look at where it pulls back to. It pulls back right to that 9-day EMA. It's holding that 9-day EMA, which signifies that the trend is a strong trend. As it pulled back here, what happens to volume? Volume dips. Volume dips, which is a very good indication that it's a pullback. It's not a reversal. Volume dips, you want to start to see volume pull back up and the stock to actually move with it. This candle right here is going to be your entry candle for a scalp on the upside as the stock moves. Fully holding above the 9-day EMA, stock pulled back, only a pullback, still had the 9-day EMA and still held this support level of 856, pulled back right there. This is your entry candle for a break, for a bounce play off of your EMAs, as well as the breakout of the previous level, because you can see this candle broke out of the previous level. On this breakout, volume spikes, Tesla makes a strong move to the upside. Okay, now what you start to see here is if you are in a trade, so say for example you are in a trade, okay, and let's say for example you are watching the 863 level here on Tesla and you got in right around here on one of these candles. Now you can see that at that 863 level, there was a little bit of a fake out on Tesla, wasn't able to hold above 863. What happens is the stock pulls back. Pulls back to your level right here at 856. But what it also pulls back to, it pulls back right to that 21-day EMA. It's able to hold the 21-day EMA, held that 860 level, held your 21-day EMA, not fully opening below the 21-day EMA. So if you get in a trade like this, this is how you can signify, this is also how you can identify whether your levels that you have set, so this, oh my God, I'm getting my levels confused. It is 856. I apologize. So whether the levels you have set on the stock are significant or not, and you can see that it is a significant level at 856 because it is also that EMA. It's holding right above that 856 level. Stock is holding both levels on the EMA and on 856. If you get in right here, 856 is going to be your stop loss. Stock holds your EMAs, still signifying a trend on the upside because it's holding above the EMA. And what does the stock do? It continues its uptrend towards the end of the day. And if we look at this on the 5-minute time frame as well, you're going to see the same concept here. So I'm going to change this to the 5-minute time frame for Tesla, and this is actually going to show you even cleaner version of that move. So what we see here, move up in the morning, stock pulls back here. When it pulls back, what does volume do? Dips. When volume dips, signifies a pullback, creates a U-shape as the stock pulls back up. Stock creates a U-shape on volume. This right here is your entry candle, holds fully above the 9-day EMA, and this is your trend on the upside. Okay, so I went through a couple ways to utilize them. So your EMAs you want to use as your EMAs and your VWAP you want to use as support and resistance levels. You want to watch for an EMA cross and a VWAP cross to signify trends in the stock, and then obviously if the stock is holding above those EMAs or below them, signify an uptrend on the upside. If it's holding above, downtrend on the downside if it's holding below. Same concept with the VWAP, just another kind of signifier of the trend that the stock is on. So I used all three of them just because it signifies more confirmation that the trend that the stock is on, the support or resistance levels that I'm watching are significant levels. It's a significant trend on either side. So that's why I use both the EMAs and the VWAP. It's been a strategy that I've been utilizing for the past several months, and it's been really, really helpful. The EMAs I've actually been using since I started trading. Volume average indicator is going to help you understand where there's high volume and where there's significantly low volume as you're watching it trend below the moving average or above the moving average. All right, guys, so that's it for this week's video. Thank you so much for watching. If you enjoyed the video and found it helpful, don't forget to give me a thumbs up. If you have any questions on any of the indicators that I utilize, just go ahead and comment down below and I'll make sure to respond. And yeah, I'll catch you guys in next week's video. Bye.